Hi, everybody. I'm Lindsay with Design Manager Software. Here today with Peter Lang. Peter Lang has decided to do a guest webinar for us, so we're super excited about that. And I just wanted to give him a little introduction before we get rolling. So, Peter is an accountant who specializes in the unique accounting challenges faced by artistic professionals, like interior designers. He has a bachelor's in accounting, a master's in taxation. He is a certified public accountant or CPA, and he is certified DM accountant as well, with 16 years of experience under his belt. Most importantly, though, he is an accountant that you will actually enjoy talking to. So I will turn it over to Peter now to give us a presentation about choosing the right legal structure for your business and also choosing the right CPA for your business. So he's going to load you up with some questions to ask your CPA if you're interviewing him beforehand, which is really super helpful. Now, during the webinar, when Peter asks questions, feel free to type into the chat window or the questions window like our normal webinars, so I can announce those to him. All right, Peter, all yours.
Thank you, Lindsay. Thanks, everyone, for joining us today. Just to give you some background, my name is Peter Lang. I am a CPA, and this is, you can see my website, and we're on Instagram as well. And if you do have any questions that we don't have time to get, or after, if you think of anything after, feel free to send me an email. My email is peter@thedesignercpa.com. It's an extremely busy time of year, but I will get back to you when I do get a chance, I promise. Just please be patient with the end of March rolling around. So we are going to try to keep this as light as possible. But we're also, it's also important for us to give you the information that you need so that you can have you can continue or grow your business financially and achieve your financial goals. So just to go over the agenda, like we said, we were going to talk about the different types of business structures and how the decision can save you thousands of taxes every year. That's not just a one-time thing. The questions you should ask to confirm you chose the right CPA for your design business. And also, we're just going to briefly go over some of the basic information that you need to review with your finance team, even if you hate numbers. We're going to be doing other webinars throughout the year and kind of going into more detail, but I did want to kind of give you a taste of the different reports that you can find in Design Manager that, as a business owner, you really should be, you should really be looking at least on a monthly basis. Okay, so what types of business structures are available out there? So sole proprietor is the most common structure for designers who are starting their business. And for each one, I kind of give some generic pros and cons. It's the easiest to set up. So I don't know how many people out there. That's a good question. If you wanted to kind of put that into the chat or question, just wondering what you are currently would be great. We can kind of talk about that later in the presentation. But some of the cons of the sole proprietor: there's no protection against personal assets, and all of your profits are subject to an additional self-employment tax rate of 15%. So you have your regular income tax rate, whatever that is, when you file your tax return. So just to go over this, because I see this a lot with people who are starting out. When they elect to be a sole proprietor, they think, well, I have a business, therefore I must need a business tax return done. And if you're a sole proprietor, or even if you're an LLC, what's called a single member LLC, that business information is going to go on your personal tax return. And when it goes on your personal tax return, you have to pay taxes, an income tax rate, based on that information, plus all your other information that goes on your personal return. But what the IRS does, is they charge an additional 15% on that profit. Okay, so we'll talk more about that, but that's all part of some of the cons of being a sole proprietor. A partnership is another example. That's the same as a sole proprietor, except you have more than one owner. So if you always wanted to start out a business with someone and you do have a partner and you formed an LLC, you are a partnership. Now, if you're a partnership, you do have to file a separate tax return, but that information still goes on your personal tax return. So the cons of the sole proprietor of having to pay an additional self-employment tax on all of your profits, that's the same thing as a partnership as well. So another type of entity that you can be is what's called an S corporation. An S corporation is a separate entity that has one or more shareholders, owners, and directors, and it's required to file a separate tax return in addition to your personal return. So an S corporation can be one owner or more than one owner. So some of the pros of being an S corporation: you're paying your shareholders what's called a reasonable salary through a W-2, and it can limit that self-employment tax rate. So if you've never heard of an S corporation, basically what happens is there's whereas the sole proprietorship, you have to pay that self-employment tax on the entire profit amount. We find ways of limiting that self-employment tax. And so a lot of times people will say, well, what's the cons of being an S corporation? You're telling me about saving all this money, but what are some of the cons? Only common stock can be issued. Preferred stock is not allowed. Now, if you're a small business with a couple of people, you might say, well, who cares about preferred stock? But that's something that some corporations are interested in, and they have it. So if they wanted to do preferred stock where some of the shareholders get a more preferential, a higher benefit than the common stockholders, then you can't be an S corporation. And you also can't have more than 100 shareholders, which may seem like quite a bit of owners to some people that are listening. But in a big company where there's more than 100 owners or shareholders, then an S corporation is not allowed. Okay, so how will I know it's time to switch my business structure? So this is a good profitability tip. So every business is different. But if your profit exceeds $40,000 per year and your business is going to continue to grow, then it's time to start thinking about being an S corporation. So before I go any further, if you're listening and you're reading that and you're like, okay, what does profit mean? How do I know if my profits exceed $40,000 per year? First of all, you can look at the profit and loss or the income statement report that's in Design Manager, and that will show you what your net income or your profit is. But basically, your profit is you've got all of your gross receipts, all of your gross sales that came in, minus all of the expenses that you paid throughout the year, and that's your profit. Now, don't count the money that you paid yourself, but all the other business expenses. When you're looking at that, if you're looking at that report in Design Manager and the bottom number is 40,000 or higher, then you need to start to look at talking to a professional about becoming an S corporation. So you can save money by determining what's called a reasonable salary and paying the shareholder through a paycheck. So if you used to work and you used to get a W-2 when you were working, and then you started a business and it's just you, and you kind of take some money out and use for personal reasons throughout the year. Now you're going to go back. You're still an owner of the company, but you're going to go back and you're going to set yourself up with payroll and start to pay yourself through a paycheck so now you're an employee and an owner. So here's an example. So you've been operating as a sole proprietor. So this particular designer is in her second year of business, and she's projecting an annual profit of $80,000 this year. So it's over the $40,000 amount. Now it's time to start thinking about the S corporation. And so knowing this information, she elects to be considered an S corporation for tax purposes and determines a reasonable salary of $50,000 per year. Okay, so I just want to let you know that if you're operating as an LLC, you're still an LLC. So if you're a single member LLC and you're operating as a sole proprietor and you want to switch to an S corporation, you are still an LLC. An LLC is more of a legal structure versus a tax structure. If you want to elect to be an S corporation, you're simply telling the IRS that going forward at this point, whatever time you pick, I want to be taxed as an S corporation. So now you're going to elect to be an S corporation. Now you're an employee. You need to set up payroll. And so we're going to we came up with, let's say in this example, a reasonable salary for the year of $50,000. And so we're going to pay ourselves a paycheck for the year of $50,000. So what happens between the total profit's $80,000. She pays herself a reasonable salary through a paycheck of $50,000. So she still has to pay the self-employment tax on that entire $50,000. But that $30,000 difference between the two numbers is now not subject to self-employment tax, which is a straight, that 15.3% self-employment tax rate is across the board the same for every single person. Okay, so now you're saving yourself $4,590 in taxes for the year. And that's not just 1 year, that's every year. And then as the business grows, if you're planning on growing the business, that savings, that annual savings is just going to get bigger and bigger. Okay, so if you just heard that example and it kind of sounds like you, but you're a sole proprietor, what if I just realized that my business is not structured correctly? So if you're used to, one thing before I say that, if you're used to taking 80, because this is a question that comes up when I tell my clients that are sole proprietors and I say, it's time to start becoming an S corp, and we will make you a reasonable salary of $50,000. Sometimes I see a look of fear in my client's face, and so I'm like, okay, I just explained to you that I could save you, $4,500 a year in taxes. Why are they, why is that look of fear, that confusion there? In that situation, some people, when they make $80,000, they need to take $80,000 a year out of the business. And so then they're saying to me, well, I need more than $50,000. So don't worry about that. You can still, if your business is going to continue to grow and you're able to take the full $80,000 out, you still can take $80,000 out. That extra $30,000 can be taken out. But instead of doing it through a paycheck, you're going to pay yourself out in a check, but it's going to be something called distributions. So I added that because I wanted to make sure that if I just explained that to you and you're someone who listened to that and said, that sounds good, but I need to pay myself $80,000, it's okay. You still can do that, and you can still save thousands of dollars every year in taxes. Okay, now what if you heard that and this all sounds good and it sounds like you and you realize I'm not structured correctly? Don't worry about it. You can change the structure at any time with the IRS. You don't have to wait till the first of the year. So if you're listening to this and it's right now it's March of 2019 and you're like, oh man, I wish I was an S corporation. Now I'm going to have to wait till 2020. I can't take advantage of this. It's okay. You can still file. Actually, you can still file throughout the year. There's ways that us as CPAs know how to use certain language when we're applying with the IRS, so that they will give you credit starting in the beginning of 2019. Now, some people say, "Can I go back to previous years?" No, you want to start out at the first day of the year that you're listening to. Right now it's 2019. So there's no reason to worry if you're in a situation where you need to change it. There's still plenty of time. Okay, so here's another tip I like to give clients or people who are listening to me. Each business is unique, so you should consult with your attorney and your CPA. So a lot of times people will call me and they'll say, should I be an LLC? What do you think about that? And I always say, well, I can give you the tax benefits. I can tell you the tax ramifications of doing that. I can kind of tell you also what that all means, but it's really important to consult with an attorney when it comes to that kind of stuff, because like I said before, it's more of a legal structure. So you want an entire team behind you giving you advice. The other tip is if you ask your CPA, well, let's say that your CPA said, well, you should be an S Corp, and you kind of ignored your CPA. At this point, you haven't done it. Ask your CPA to compare how much tax savings you'll have. But I've heard stories where the CPA gives the information and lets you know how much tax savings you'd have. But make sure they add the cost of what it's going to cost to switch to an S corporation. If you're a sole proprietor and it's just you and you don't have any employees on payroll, well, now you as the owner have to be on payroll. So you're going to have to add that cost, that monthly cost of having a payroll company file your payroll reports. You don't want to do it yourself, because that's the last thing that you would want. You would want to have to do with the IRS is file your own payroll. So there's a cost to that, and there's also an extra tax return. So chances are your CPA is gonna add to the annual bill with an extra tax return comes extra costs. So if you're going to change, it needs to be worth it. So I also always say there's a question, and everyone can answer it if they want. But if you had to come up with $2,000 more in cash every year, that has to directly come out of your business checking account, but it would save you $7,000 in taxes every year, would you do it? And so hopefully all of the answers that come in are yes. I only say that because I have had a couple of times where I've presented this, and the client has said, well, I don't have the extra money to pay for the extra tax return, or I don't want to pay the extra in the payroll processing fees or something like that. But now you're paying more in taxes. So it's definitely a benefit and something that we recommend if the time is right for the person. But you want to make sure you see a full comprehensive analysis of how much am I saving in taxes, and also how much extra cost, and hopefully the net amount is still still worth switching. Okay. So let's move on to a new topic. What are the best questions to ask your current or a potential new CPA? First question, what designers do you currently work with? So you need to just ask that, because you want to determine how important it is for a business owner to have you need to determine how important it is for you as a business owner to have a CPA that specializes in the design industry. So I've talked to some people and they'll say, well, I'm the only interior designer that my accountant works with, but they're great. And that's totally fine. There's no problems with that. Where some people, some business owners, some interior designers will say, I want to work with someone who only works with interior designers because I know how unique my industry is when it comes to accounting and tax, and I want to make sure that they have, however many, 5, 10, different clients, they can give me examples of working with them so that I know that they understand my industry. Another question, can you tell me about your experience working with different interior design software? So sometimes I've worked in past jobs where the CPA felt like the client needed, or their bookkeeper needed, to give them everything they needed through a PDF report. And they wouldn't do any of the work, or they wouldn't give any tax planning ideas until they had that report. So can your CPA or can someone on their staff or team log into your interior design software and get the reports they need to give you good tax planning advice, or to do the tax return, or if they do that, help you with sales tax or anything like that? Can they do that? Here's why it's important. You want to make sure that they can go in and kind of look at those reports so that they can give you good planning advice as your business goes along throughout the year. Another great question is, describe your relationship with bookkeepers who work with your design clients. So here's a tip. You want to listen closely to this answer. Is the potential candidate, is the potential accountant that you're talking to positive when they talk about this? Or did they start to complain about having to fix everything because the bookkeeper doesn't know anything, and then, you know, now all of a sudden you've kind of hit a nerve with them, and you can see, wow, this person got negative pretty quickly? Or is it, yeah, you know, I work with a couple of different bookkeepers, and we work together, and we're in constant communication throughout the year, and everyone's on the same page so that we're giving the client the best advice to help them along the way. So a good question I have is whether you're currently working with a bookkeeper and a CPA. Are you just working with a bookkeeper? Are you doing it yourself? So if anyone wanted to comment on that, that's always interesting to see, because you know, it all depends. There's the people that I meet throughout the year. You know, there's people that have a bookkeeper and a CPA, or maybe just a bookkeeper. So this is a good one to ask, because you'll be able to kind of catch the accountant off guard and see what kind of reaction that they would have. Some other questions. Will you review what method of accounting is best for my business, accrual or cash? So we know Design Manager runs on the accrual basis, and we also know that you know, most softwares out there will run on either or. Here's a good tip for you that you may not know. Hopefully you were asked this, but the first year a CPA does a tax return, there's an option on the tax return to choose either the accrual or cash method of accounting. Now, a lot of CPAs or tax preparers out there, some of them will ask, but some of them will just choose the cash method because it's the easiest, or maybe that year it just seemed like it was the most beneficial at the time. Who knows if they even asked whether or not, you know, what you're planning on doing, what your future looks like, or anything like that. So you want to ask that potential CPA or your current CPA, hey, when you chose accrual or cash, or can you give me some examples of, did you ask your client what would be best for them, or did you kind of just pick one? And I'm not saying one is better than the other. It's all different for every client. But it's important that we, you know, pay attention to this stuff as tax preparers, so that we're giving the client the best option as far as paying taxes is concerned. Kind of what I said in the last one. Another question: can you or someone in your staff handle logging into our cloud-based accounting software and accessing the necessary reports? I kind of said that before, but why is this important? Because you want to make sure that you're not having to go in and get all the reports and saving them as PDFs and sending them to the CPA, and then waiting to see if they actually got it, and then did you review it? It shouldn't be on you. It should be, you know, that they can go in and get what they need and look at something, and then when they're in there and they're looking at a report, maybe something jumps out, and then they're able to kind of look at a different report. We know, you know, Design Manager has a ton of different reports to look at, so maybe something pops out when they're looking at an overview report, and now they're able to, like, you know, drill down and be able to see what that is before they meet you, so that they can give you great advice. Let's see, other questions. How often do you typically meet with your clients? So you're looking for a minimum of 2 times a year with this question. If your CPA only meets you or talks to you once a year when it comes time to do the tax return, which I've seen a million times before, where the business is growing like crazy. And if you're sitting there and you are required to make estimated tax payments throughout the year, let me give you some advice. I will tell you a little secret. Every single tax software out there that tax preparers use, those estimated tax payments are based on the prior year. Every software is assuming that your year is just going to be the same. Now, there's ways to do projections and to change those as the year goes on, but if your CPA only sees you when you know, in January and February when you're getting all those tax documents in, and you go in and you just drop it off and dump it off, and then they're like, wow, you had a great year, you owe $15,000. And you spent that money that you had extra money on something else because you didn't realize it, and you said, well, I made all my quarterly tax payments. I didn't know this was going to happen. You know, it's important that you're talking to your CPA at least 2 times a year, so that as the business changes throughout the year and you're hopefully achieving your goals and growing more and more, that they can project out what's going to happen, and then filing the tax return is no problem because you've paid in all the necessary tax, and hopefully you're breaking even and you're moving on. Another great question to ask is, how do you charge? It's important to know this, how you're going to be invoiced, so that you can budget for your future cash flows in your business. Old school traditional CPA firms sometimes, and I know there's a lot still out there that might say, well, you know, it depends on how long it's going to take, and everybody here has a different billable rate, so you know, I don't know, you know, we're gonna see. Well, that's old school. I mean, you need to know how much it's going to be so that you can budget, like I said. And if they can't give you an answer or a range at least, or guarantee a range, then you know, let's just say there's a lot of new school accounting firms out there throughout the country that can give you a solid answer so that you can, you know, better plan. The other thing is remember, you are in charge. You're the one paying the bill. So if you don't feel comfortable asking questions, make sure you get an answer that helps you understand. I see this a lot. There's a lot of fear, like I can't ask these questions because I'm going to get yelled at, or I don't really know, you know, how I don't really know what I'm asking. How can I ask them? Well, if you get any pushback, then you know you need to keep looking for someone who you feel comfortable with. So what if you don't like the answers that you're getting from this potential CPA? Or what if in your gut right now you're listening to me and you're like, man, my accountant I know that it's not the right fit for me and my business. Well, you're going to interview or keep interviewing potential clients until you feel comfortable with the individual that you pick. Have the courage to find the perfect teammate, because after all, this is your business and you work your butt off designing great projects, and you should have the people on your team, you know, rooting for you and knowing what your goals are and working with you throughout the year so that you're able to achieve them, right? So the right accountant will answer your questions with patience and clarity, no matter how many times you have to ask them. Now, a lot of accountants, you know, may not do that, but there are some, and I know quite a few of them, that will. So I think that's really important. The right accountant will be willing to meet with you once a year, at least. If you can't find the time to meet more than once a year, so if they can't find the time to meet more than once a year, then they're not a team member that's in the best interest for your business to grow. It's as simple as that. They're just in business to spit out tax returns, and then as soon as a couple of weeks from now when tax season ends, they're going to go play golf and go to the beach, you know, for the rest of the year. That's not, you know, if you're looking to grow your business, that's not a good team member. And then the right accountant is going to have a clear answer on how they bill, how they charge, even their buying process. You know, what is it like to be a client? What will I expect until I become a client, and then afterwards? And then, like I said, if they say it depends, then you may be in for a cash flow surprise during the relationship. A long time ago, I used to work for someone who kind of said it depends, it's based on the hour, and then the client got a $6,000 bill without knowing it, and I think they had paid like $1,500 the year before, so of course they were mad, and the relationship was over. And then there was fighting on whether or not they had to prove the time, and it's just not a good way that business should be. So having clarity and getting the right answers is the most important thing. So if you have any questions on that, those are just some of good questions to ask. And like I said, have the courage to ask those questions. Okay, so now you've asked all the questions that you need for a potential accountant and or your current accountant, and you've hopefully either feel good about that and you say, yep, I love my accountant, and or you're like, I think I know, I'm in the process of interviewing one, and I think I got it. Now I'm going to throw it back at you guys as business owners, as entrepreneurs, and tell you that there is non-negotiable financial information that you cannot afford to ignore as a business owner. And I get this from my clients all the time as designers. They'll say, I don't understand, I don't like finances, I don't like numbers, you should this is your job, I can't be bothered with this. But I always say, you sound ridiculous, because as designers, you guys are working with numbers all the time. So I kind of throw it back on my clients and say, there are certain things that you need to look at, and I'll be happy to help you understand it, and I'll explain to you what all those things are, but you should be looking at these things at least on a monthly basis, so that you have an idea of where your business stands, and you can come up with good questions to ask your team so that you understand. Okay, so the first thing that I was going to talk about is what's called the balance sheet. What is it? A balance sheet is a current snapshot of your company's assets and liabilities. So picture a balance sheet as a picture. Just like if you're looking for the best painting to put on the wall for your client for a project, a balance sheet is a picture of what your business looks like on any given day, whether it's today, whether it was the last day of last year, whatever that is. So why can't you afford to ignore this? Well, you may be working just to pay off debt. So you might go into Design Manager and you might look at your balance sheet and say, oh man, I don't understand any of this, and I feel like I can't ask any questions. This is a very simple thing that you can look at to kind of get a glimpse of a broad overview of where your business stands right now. Look at the total cash amount in all your cash accounts, and then subtract that number from your all of your credit card bills. Do you get a plus or minus number, and why? I mean, is it a situation where you know that you had to put a lot on for a project last week and that's why? Fine. But that's a good quick indication of where your business is at as far as cash flow, on whether or not you're working to grow, or are you just working right now just to pay off debt. Okay, the next one is the profit and loss. What is it? It's the profit. Your profit is what you have left over after all the bills are paid from the cash that came into the business. So we talked a little bit about profit before, and when we figure out whether or not we want to switch to an S corporation, that profit and loss is showing you that. Why you can't afford to ignore it: is your business just a hobby, or are you actually making money? A good way of looking at that is to see what your profit and loss says at the bottom of the report. Okay, a couple other ones. Accounts receivable summary. So all these reports you can find in the report section in the software. What is it? An accounts receivable summary is a list of customers that owe the business money. Why is this Why can't you afford to ignore it? Well, you didn't get into business to be someone's bank. The longer it takes to get paid by your customers, the longer your business can't grow. You don't want, just like in my business, you know, if I had someone who I did their tax return and then I got around to billing them for that in May or June, and then I kind of didn't check on whether or not they paid that bill until September, and then I wait till Halloween to ask them for the money. Well, I just let someone borrow however much money for 6 months without getting that. And that's money that the business could have used to buy something, to invest in the business, and to grow it out. Accounts payable summary is just like the accounts receivable, but instead of looking at a list of customers or clients that owe you money, now you're looking at a list of vendors that you owe money to, and why you can't afford to ignore it. If you don't pay your bills, your vendors are going to stop selling goods and services to you, and your project's going to get delayed. So if you have a transportation company that needs to move the things you buy from the warehouse to your client location to finish a project, and you don't pay that company, they're not after a while, they're not gonna come for you, and your client's gonna be like, "Where's my stuff? How that you said this project was gonna be done?" So a quick look at these reports on a weekly or bi-weekly, on that rate at least, will give you a good idea of cash flow and what, so if you can keep looking at accounts receivable and you can keep getting that cash in on those clients and on what then you have the money to settle the accounts payable, and life's good, and everyone's happy. A couple of other ones. The cash flow statement, what is it? This is a report that shows you the increase or decrease in cash during a time of period in your business. So what's the difference between a cash flow statement and a profit and loss statement? A cash flow statement will include the amount of money you took out of the business for personal reasons, where a profit and loss statement won't. Okay, so that's the biggest difference. And why you can't afford to ignore it, cash is king. There is more to the story than just the profit and loss statement. Without cash, your business is stalled, just like we talked about with the accounts receivable report. You need money to keep growing. And then sales tax statements, which you can look in and look in you can customize it for a period of time based on your jurisdiction and how often you have to file sales tax. But you can see a list of invoices during a period and the corresponding sales tax amount, and it's really great, and a super report that makes filing sales tax easy. Why can't you afford to ignore it? Well, if you ignore sales tax issues and you don't pay your sales tax, you're gonna get in trouble with a jurisdiction. You might lose your resale certificate, your business is gonna suffer, and quite frankly, you don't have time to get in the bad graces of whatever jurisdiction you're in. That's just not something that you want to do. So whether you do it yourself or you need help doing that, there are great reports out there that make it easy, and it's something that you need to pay attention to. Okay, so let's just kind of talk about some final takeaways here. You can change your business structure as well as the method of accounting anytime, and having the right CPA that will explain the tax and financial benefits of each option, benefits and cost, I should have put cost in there, is the most important. So whatever the net benefit of those things are, having the right person to explain that to you is really important. You need to have complete trust and confidence in your CPA, and if you don't, you have the tools now to find an advisor that wants to see your business grow. And don't feel bad about it. So a lot of times people will say, I know I need to change, but I've been with him or her forever, and my dad used to go to him, or blah 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 blah. He's friends with this person, whatever. I've done it before in the past with other types of vendors, and it's your business at the end of the day. And if your business if your business is suffering or not getting the right attention, then it's time to do something about it. And no matter how much you trust your accountant, you have an obligation to review certain financial information for your business. You are an entrepreneur. and you cannot achieve your goals if you ignore your finances. So there's your part too. And finally, don't be afraid to ask questions. There's no such thing as a stupid question. And that's all I got. So that's my email address if anyone has any questions.
Peter, we actually have a couple questions. Would you mind answering just a few here?
Sure.
Okay. So I have a designer who actually files her own taxes as she is a sole proprietor. Do you think that she could handle doing the S Corp taxes filing herself, or would you recommend having her do that through a CPA?
So I'll tell you what form you need to fill out. You can Google it and find it on the IRS website. It's Form 2553. And when you fill that out and sign it and just send it to the IRS, they'll send you something back after their process period, which God knows, I mean, it could be 4 to 6 weeks before you hear from them. But you'll get something from the IRS that just kind of says, thank you for sending in that form, and as of such and such a date, you are now considered an S corporation.
Okay, great. So it doesn't sound too scary there. And then another question about working with a virtual CPA. Do you recommend that, or do you recommend having somebody local? You know, what's the best case scenario, but what's okay to do?
Mm-hmm. Well, I will tell you that I am a virtual CPA, but I also have local interior designers, or at least I'm actually in Rhode Island. So I started my career in Boston. So there are clients that I still have in Boston that will either meet using Zoom video calls, or I'll drive up there and see them if it's you know, a lighter time of year. I mean, it's all about how comfortable you are with technology, how comfortable the accountant is with technology. It's more of a preference thing. So I'd like to believe that the clients that I have virtually would answer the questions with, I don't have a problem with using Peter as a virtual client because I can see him and we can talk, and it's kind of like almost like having a local CPA. But, you know, just like everyone's comfort level on what they want, you know, their CPA to be like, a lot of CPAs are they're, you know, they're comfortable. Their comfort level is different as well. So I know of a lot of CPAs out there who wouldn't be comfortable with getting a camera and figuring out Zoom and talking to someone over the computer. It's just a preference thing, really.
Okay, so if you can work it out, it sounds like it's completely doable.
And one other thing I was going to say is with you know, with cloud-based software here, and mostly everything being able to be online, it's easier than ever to be able to do that.
Great. I totally agree. So we have a couple of questions surrounding like paying yourself as the, you know, main designer at the company. You know, one question is about, you know, I like to pay myself hourly versus doing a salary, you know, based on the billable hours. Do you have any recommendations or feelings about that?
Yeah, that's fine. It's okay how you pay yourself out throughout the year. I would just say, I just would make sure that by the time the year is over, you've paid yourself enough. Okay, I'll try to explain this without sounding too, you know, tax dorky here, but if you don't pay your, okay, what the IRS's bread and butter is payroll tax, believe it or not. So they're just saying reasonable salary because they want to make sure you pay yourself enough in a reasonable salary that you're paying them enough in payroll taxes. So they don't need to see all of the amount. They just want to see a reasonable amount. But who knows what that is? So I'll give you kind of like a standard that some accountants will use. Like they'll say, well, your reasonable salary should be somewhere between like 50 and 60% of your total profit for the year. So I would say as long, it's okay how you want to pay yourself hourly or salary throughout the year, that's fine. Just make sure that you are asking your accountant, or you know that your salary is reasonable enough where the IRS isn't going to come back and say, you know, you barely pay, you made 100,000, you paid yourself 5,000, and we think you should have paid more, and now you're going to pony up the money to pay that back.
Understand, and that's
And
a great
I'm
answer
sorry,
because
and
that actually,
a good accountant will tell you what a reasonable salary is.
oh, great. That actually knocks out the next question on the list too. So thank you for that. And then this is a great question. Peter and I actually talk about this frequently, but so I'll read it verbatim. But I'm a little confused as to where my job as a designer, sole proprietor, ends and the bookkeeper's begins when it comes to accounting. I'm used to handling all of my accounting myself, but I'm growing quickly and trying to let go of things. Can you explain this in a little bit more detail? Any recommendations surrounding that question?
Yeah, so I will say that I'm not a bookkeeper, and but a lot of bookkeepers will say that, well, I will say like a bookkeeper would think, I've got to reconcile the bank accounts, I've got to reconcile the credit card statements, and make sure that those ending balances in the software agree with the, you know, just to make sure that every single transaction has been put in and we know we're working with good ending numbers. Now, the next step would be, you know, who's invoicing, who's doing the proposals, who's doing the purchase orders, who's doing the vendor invoices. That's the next step. So I know some bookkeepers work with like packages where they're like, the basic level of a bookkeeper is to, you know, make sure, like I said, those bank accounts and the credit cards are reconciled. And then the next step might be, you know, can you send invoices to our customers? Can you send invoices to your to our vendors? Can you make sure that those get paid? And then the next step might be, and usually a lot of times when this happens, like people will hire a design assistant or a project manager, or just some sort of like office assistant to be like, you know, we need to put the items into the project, and we need to come up with the proposals, and we need to come up with then the invoices and that kind of stuff. So every level is different, and of course, as you add more and more things, or you give the bookkeeper more, first of all, you need to make sure that the bookkeeper and you are on the same page, because you might think bookkeeping is invoices and proposals and POs and all this stuff, but a bookkeeper, you know, might say, well, no, I'm only here to reconcile, and that's fine if you want to do, you know, you want me to do more, but then, you know, it takes longer, so it's going to cost more money.
No, actually, that's a great answer. And I would actually just add to that that we actually have another webinar on the 5 monthly report that you should run. So what we usually say too is to work with your bookkeeper closely and print those reports together, or have him or her print them for you and just review them for about an hour every month. Because that's just a little thing in addition to doing the reconciling that can really keep you guys on the same page.
Right, and monthly meetings with them at least are great, because you could, based on how, you know, the design firm works, a lot of times they might get a retainer, right? And so then it goes into that open client deposit report, and then you could review the accounts receivable report, and there could be a bunch of open invoices on there, but really you already received the payments, they're just still hiding in the open client deposit report, and then it's just a matter of closing those things out. And
That's
a lot
exactly
of times
it.
the bookkeeper might not know, and they might not get a chance to talk to you in detail. You're busy, you've been out on projects. Why are all these things open? I remember we used to have like a sit-down meeting twice a month at a firm that I used to work at, when I would go right in there, and you know, we would just get the principal off the road and in to go over the reports, and he would be like, this is old, this is closed, whatever, and then we knew, okay, we need to clean these reports up, and now we know we're working with accurate numbers.
100%. Yes, absolutely. And I think that actually wraps it up for the questions, Peter. Thank you. Thank you so much. We've gotten a bunch of nice responses so far and a bunch of nice emails, asking for the recording. So we will put the recording up on YouTube, and we'll also be emailing it out to everybody. So thank you to
Awesome. Well,
Peter.
thanks for
And
having me, guys.
yeah, thank you to everybody that showed up today. All right.